Hello, everyone, and welcome to the September 2022 Real Estate Market Report for San Jose, California. My name's Robert Whitelaw, and I am a licensed real estate broker with Whitelaw & Sons Real Estate Services right here in Silicon Valley. Ready to help you with any real estate needs you might have, including giving you a more detailed look at how your home's value stacks up given the realities of the current numbers that we're going to see today for the city overall. Now, let's go ahead and start where we usually do, which is the total number of active listings for the month of September. Now, what is this number? It's basically a grand total of all the homes that were available in the month of September. And for you buyers, think of that as the inventory that you had to choose from. And an increasing number here is obviously good for you. And sellers, think of this as the competition. How many homes are you competing against out in the marketplace to try to get your home sold and to get the attention of buyers who would potentially purchase your home? For you, obviously, a lower number is better. It's better to have less competition as a seller than more. Now, if we take a look at the numbers, we can see that in September of 2021, we had 704 homes on the market in the month of September. We saw a dramatic increase, 20% increase in the total inventory in September of 2022 to 845 homes. Now, just to sort of give you a feeling for the chart you're looking at right now, you do see the month of September 2021 on this chart twice. The reason is because I also wanted to have it located directly next to the month we're comparing it to, which is September of 2022. So off to the right here, you can clearly see that we've got September of 2021 noted, but it is also at this end so that we can get a feeling for two things at the same time. One, comparing a slice of time or September of 2022 to September of 2021. But then at the same time, we're also looking at historical data. What do the trends show us about the market? Because we want to know where we are, but we also want to try to figure out where we're going. So in terms of total active listings, right now, we're up from the same time last year. So we're accumulating listings or homes on the market. But now let's take a second to look at where we might be going. Now, if we look at September of last year, we saw that every month after September up through December, we saw declines in inventory. So that is an interesting thing to note, and it's particularly since we're now in a position where we've already sort of seen a decline from July through August into September. And the reason for this is seasonal. Sure, we all know what happens in wintertime. We get Thanksgiving going, we get Christmas going. So we're more interested in focusing our attention on the holiday times when we're going to have family and friends over. So typically folks will take their homes off of the market or won't list their homes during these times. And that's usually going to hit in November and December. So we should continue to see a decline in total inventory in the coming months with a turnaround coming in January. My feeling in terms of just the ground truth that I see with clients that I talk to who are interested in buying and selling real estate in all the areas I serve is that we'll see the same trend, but the numbers will be bigger in terms of inventory. I think that we're going to see potentially in San Jose, not as dramatic a level of relative decline, but more flat, simply because we have more homes on the market than we did the same time last year. Now, granted, in July, we did see a very big peak, but I think we'll see more mild changes moving forward through the year. And that's an interesting thing to note if you are a buyer. One thing to pay attention to are those homes that stay on the market through November, December are serious sellers. These are folks who might be more motivated, and it might give you some insights into how aggressive you can be with your offers. Now, let's go ahead and take a look at the number of homes that were actually listed in the month of September. These are sellers who decided to sign a listing agreement and list their home with a real estate agent and put it on the MLS to get it sold. Dramatic decrease when compared to the same time last year. In September of 2022, that number was at 671 listings added to the marketplace. In 2021, that was 892. Now, that's nearly a 25% decrease in the total number of homes added to the market. And if we try to figure out trends, where things might be going from here, just like we saw with the previous number, a decrease in total number of listings is usually what happens as we head into October, November, December, and then we see a boost in January and February. It wouldn't surprise me if, given the current economic pressures that we're seeing, we see a bigger uptick in the number of listings in January of 2023. So something to keep an eye on. Next, let's talk about homes sold. A dramatic drop. between this time last year and this year. So in September of 2022, 634 homes sold in San Jose. In September of 2021, that number was 852 homes. That's a 25.6% decrease in the total number of homes sold. And if we look at the numbers from last year to try to anticipate where we're going to be going, clearly the same seasonal influences are in play where we would see a drop in the number of homes sold. I want to suggest that for buyers out there that take my advice, and we have seen years like this in the past, where when homes stay on the market during the winter season, buyers will frequently see that as an opportune time to potentially buy a home, since they know the sellers still on the market during that time period are serious home sellers and may be willing to entertain more aggressive offers. Let's go ahead now and take a look at average list price. Now, average list price, as I track it, is not what the list price was at the home an offer was accepted. We take that into account in a future slide. In this slide, I want this to be a way to calibrate you to what seller expectations are. And by that, I mean the day that that seller listed that home for sale, what was the price that was agreed upon to initially market the home for? Why? Because that is what their initial expectation was. This is what the seller originally thought they were going to be able to sell their home for. So it helps to set you on the same path as the seller, if you're a buyer, on what was their mindset, what were they thinking when they listed. And for some folks who are way up there in terms of listing prices, their expectations being much higher than the real market, you can often find that it's difficult for buyers to negotiate through those initial expectations of sellers. And as this number changes and it becomes smaller, or when compared to actually for what it sells for, it can be an opportunity for you to see a point in time where the pricing of homes is falling far more reasonably into what the market is reflecting. Okay. So let's go ahead and take a look at what the average list price is in September of 2022 in San Jose, and that is $1,421,689. That is up 15.6% from the same time last year, which was $1,229,436. So compared to the same time last year, sellers' expectations have increased. They expect their homes to be worth more, and they expect it to be worth more to the tune of double digits. In fact, well into the double digits at over 15%. Now, what we can see is relatively flat performance. Now, August of 2022, obviously there was a bit of a boost, probably some very high-priced homes that had been on the market a little bit longer sold in that month, which might have skewed these numbers a little bit. That's what happened in May of 2022, but that was actually an entry error. That was a real estate agent who added too many zeros to that original list price and then had to change it just within a day. That's how dramatically those numbers can get affected by just a handful of listings. But if we're looking for a trend, since June, since April, prices have been relatively flat in terms of expectations for sellers. And that's actually a problem because we've actually seen declines since the same time last year. So we may find a disconnect that continues to exist for the next few months between where the market actually is and what sellers' expectations are. And those can initially be difficult to overcome. The reason I bring this up, for those sellers that are calibrated to these higher prices, they will frequently find that as someone who may make an offer on a home, you'll want to know that they are often folks who it will take several weeks, 3 weeks, maybe even a month, before they will start to realize, yes, the market really has changed and I am not getting offers on my home as I expected. That reality has to sink in, and frequently you're going to find that they aren't initially. So if you're looking at a home in those first couple of weeks and they don't entertain your offer or they reject your offer, I'm going to strongly suggest that buyers in that scenario stay in touch with that agent and those sellers, simply because the reality of the landscape may change. So if you are still looking at some point when the seller decides they are willing to entertain a more aggressive offer, you can still be in the circle of folks who will get that update from the listing agent. Okay. Average sales price. So this is what homes actually sold for. And an important thing to note here is the average sales price in San Jose in September of 2022 is below the list price, the original list price. So on average, sellers are not getting their asking price in San Jose when we look at it from this perspective of original sales price. Okay, we're going to show a slide in a minute that takes into account what the list price was at the time the home sold, but right now we're just calibrated to what those initial expectations were. Now we can see the prices have been gradually dropping since April of 2022. We have a 3.6% increase from the same time last year. So in September of 2022, the average sales price was $1,318,254. And last year at the same time, it was $1,272,767. $1,272,767. And we can see we are kind of approaching that number again in terms of where we'll be. And it wouldn't surprise me if within the next few months we see either zero increase from when compared to the same time of the year before, or maybe even a decrease, as we have seen in some areas already. So keep that in mind, because we're definitely in a changing market, and we are not in a market that indicates growth of price. We're in a market right now that indicates continuing declines in home prices. Next, now this is percent of list price. And in this particular case, we are using what the price of the home was at the time the offer was made. So as an example, a seller lists their home and they put on the original list price, which is the number we looked at before. Over the course of 2 or 3 weeks, they realize they're overpriced. So they drop the price by, say, $100,000. The sales price, the list price that we're looking at to calculate this number is that number. So this is a way to find out what was going on right when the home sold. So right when the home sold, on average, in San Jose, sellers got 100.3% of their asking price. So 0.3% over. Now note, last month they got under. They got 99.8. And we are just sort of hovering now right around 100%. But at the same time, last year in September, that was at 106.5%. So over a 6% drop, an over 6% drop in what sellers were getting as it related to their sales price, to their list price on the MLS. This is a big shift. It's a 5.8% drop overall from the same time last year. And look at that trend. It's a very clear trend. We see in March, we're peaking. And since then, it has been steadily declining with just a little bit of fluctuation between August and September. But I'm willing to bet that we're going to continue to see this decline, and then we'll start to stick below 100% as we move into the new year. Next, let's take a look at those days on market. As I've mentioned before with other communities that I serve, this used to not be a real number for a very long time. There was about 2 years where you didn't even really need to look at days on market. Why? Because it was artificially being defined by listing agents. For those of you who searched during that time frame, you know, if you were working with an agent, they would tell you something like, this is a home we need to look at. They have said that on this Wednesday, they will consider offers at 5 p.m. Well, and that was typically 7 to 18 days after the home was listed. So that's why you see all of these numbers hovering between 15, 16, 17, 15, going all the way back to 2021. And then, of course, things going absolutely nuts for a period of time at the beginning of February 2022 as we continued to enjoy really low interest rates. Now, once we got up to, say, 20 to 24 days, it was very clear that this days on market number was a real market number. It was actually being defined not by some arbitrary number being picked by real estate agents, but actually it's taking this long to get homes sold. So in September of 2022, we see 27 days in San Jose as how long it's taking to get a home sold on average, compared to 15 days the same time last year. Now that's an 80% increase from the same time last year. So folks are definitely having to sit and wait before they're getting the kind of offers that they're willing to accept. On average, they are tending to accept offers that are over their asking price, but only by 0.3%. So that clearly indicates we're not in a market where multiple offers are dominating the marketplace, because if they were, we'd be seeing much higher ratios. We'd see that being 102, 103, 104%. And we'd also see these numbers being much smaller. So I think we need to calibrate ourselves to this as the new reality as we move into the end of this year. These numbers are likely to just get bigger. If you'll look at the same time last year, The 2 months after September, October and November, we saw increases in the average days on market, despite the market being hot. So we will see continuing increases, and my guess is we will see increases that are bigger increases than we've seen in past years. So from July to August, we had a 4-day increase. From August to September, we had a 3-day increase. It wouldn't surprise me if we see a 4 or 5-day increase for the month of October in 2022. All right. Price reductions. Now, this is the percent of homes in San Jose in the month of September that had a price reduction. Now, what I want to do is compare this to the previous month. So this is September versus August. In September, we had 37.9% of all the homes on the market implementing a price reduction. In August, that was 36.8%. So it has increased by over 1%. This number will likely continue to stick at this level for a while. We might even see a month where it tends to peak. Interestingly enough, Gilroy saw this number peak in August, and Morgan Hill saw this number peak in September to a dramatic degree, to like 47%, 46%, despite having very low numbers in the previous month. So it's almost like as you're heading north from Gilroy up into San Jose and the heart of Silicon Valley, this realization on the part of sellers that I need to reduce my price is closing in. And it's first hit in Gilroy, like so many different market influences. It tends to hit the outer areas first and then hit the core. And it wouldn't surprise me if we see a bigger increase in this number with a peak in October or November for San Jose. Now, so the bottom line here is, after looking at these numbers, what are the recommendations? Well, for sellers, as I've told everybody else in the other communities that I serve, if you are on a shorter timeline in terms of when you're planning to sell your home, in other words, within the next year, maybe 2, maybe even 3, if you were planning to sell your home, you might want to accelerate those goals. If you are not in a position where you need to sell your home, you plan on staying in it for 5 years or more, I would not worry about this. I think that you're perfectly fine. I don't see this lasting much longer than a couple of years, potentially strung out to 3 years. But it's going to be interesting to see what happens with addressing recession once we've addressed inflation. And remember, to address inflation, they raise interest rates. To address recession, you lower interest rates. So there will come a time when interest rates start to get reduced again, but I don't know where we'll be when that decision comes, because looking at what we've been doing so far with 0.75 increases every month of the interest of the prime lending rate on the part of the Fed, we still have seen increases in inflation. My take on it is that they will up that. We may see a full 1 point increase in the prime rate with the next set of decisions that get made that may continue on. It wouldn't surprise me if we get into double-digit interest rates sooner rather than later. So given those influences on the market, I'd say that, sellers, if you can, try to take advantage of the comparatively better interest rates that are likely to be coming down the road. But again, if you don't have to, if it's not something you plan on worrying about or having to deal with for 4 or 5 years, hold on. If you do need to accelerate, you need to talk to someone. You need to talk to someone like me. I'd be happy to help you figure these numbers out. But figure out where your home fits in the market. There are some homes in some parts of San Jose where the market is remaining very strong, very robust. That's how we end up with a 0.3% over asking price, because many areas that feed that number are overrepresented by that. So make sure that you figure out where your home fits. Are you in a market that's super desirable and continues to hold its value and gives you plenty of elbow room to make a decision one way or the other? Or are you not? And are you in a market or a sub-market that's tending to be hit more hard by these changes in the local market? For you buyers, I think that you can still find excellent deals. I'm going to be actually doing a podcast coming up on where you might find some good deals for real estate. So make sure to check that out at soldbyrobert.com if you're interested in following my podcast. But I would suggest for buyers, prices need to be your focus rather than interest rates. You can always continue to get a fixed rate interest rate loan and then refinance when rates come back down again. I still suggest that you get fixed rate loans so that you're home expenses, your roof over your head isn't a variable number that will go up as interest rates go up. But I would suggest if you're interested in certain areas as a buyer, start your search now, even if you're not ready to get going on that purchase. It'll help educate you on the markets you're interested in so that you can make the best decisions possible when those opportunities do present themselves. And for you investors, I think it's the same advice. If you're not already looking actively, if you're a new investor, I would say start picking the areas you're most interested in, or settle on the class of home you're most interested in a wider area, and start getting yourself calibrated to what homes are listing for and how long they're staying on the market and what they're ending up selling for. That way you're going to be in the best possible position to have all the knowledge you need to take advantage of a great opportunity when it presents itself. All right, folks. The goal is always to leave more knowledge on the table than I take up in your time. Absolutely hope we've achieved that today. Thanks for listening, and I'll see you all in the next one.